In 2025, few stocks have been as misunderstood as IREN. Most investors still think of them as just another Bitcoin miner. But behind the scenes, something huge is brewing. They've quietly transformed into one of the fastest growing AI data center companies in North America. That means they quite literally power the world's best AI models like ChatGPT. Because of this, their most recent earnings report just shattered records. And if you connect the dots, you'll start to realize that IREN might be sitting on explosive upside. So, today, we're going to break down what IREN really is, the numbers behind their growth, and why their AI centers could make this one of the most overlooked stocks on Wall Street. Let's start at the beginning. What does IREN actually do? Until recently, they were best known for Bitcoin mining. In fact, in 2025, they ran 50 exahash of capacity, which brought in more than $1 billion in annualized revenue. However, in March, they hit pause on mining expansion and pivoted significantly into something much larger: AI infrastructure. IREN now operates massive data centers, which as of now can run 810 megawatts of operating data center capacity and 2.9 gigawatts coming in the future. To put that into perspective, 810 megawatts is enough to power over 600,000 US homes, and the contracted 2.9 gigawatts could cover the electricity needs of Philadelphia. That scale puts them in the same league as hyperscalers like Amazon Web Services, Google Cloud, and Microsoft Azure. And unlike a traditional Bitcoin miner, they're not just plugging in Bitcoin computers. They're building liquid-cooled NVIDIA-ready facilities tailored for AI workloads. Now, let's talk numbers, because fundamentals are where the story really gets crazy. Last year, IREN generated $500 million in revenue, up 168% year over year, and net income flipped positive to $87 million. On the AI side, they're scaling from just 1,900 GPUs to almost 11,000 by December 2025. As of now, they generate about $25 million in AI cloud revenue, but by the end of the year, that's expected to grow tenfold to $250 million. That's half their current yearly revenue coming online in just 3 months. And this is just the warm up. IREN's Sweetwater Hub in Texas can house up to 600,000 GPUs. That's hyperscaler territory. But who cares about these massive AI factories? Well, here's the kicker. Nebius, another AI cloud provider, just signed a $17 billion deal for 1 gigawatt worth of AI data centers. Plus, 2 weeks ago, Oracle signed a $300 billion AI cloud deal with OpenAI that uses 4.5 gigawatts of power. IREN already has 1 gigawatt, and in 2 years they're expected to have 3. It's only a matter of time before they get their own deal worth tens of billions. And for context, their current market cap is about 10 billion, so it's like IREN sitting on a digital gold mine. IREN has 3 hidden advantages that Wall Street's missing. First, their cost of power. They secure electricity at about 3.5 cents per kilowatt hour, among the lowest in the industry. For context, the average electricity price in the US is about 19 cents per kilowatt hour. That means much higher margins and faster payback on GPU investments. Because of this, they have data center profit margins of 60%. And second, vertical integration. Unlike middlemen who lease capacity, IREN owns the data centers. They secure the land, the GPUs, the power, and the cooling to run these AI factories. That lets them scale faster and lock in customers who need bare metal infrastructure. And third, timing. By moving aggressively into liquid cooling and securing non-dilutive $200 million GPU financing through the NVIDIA Partner Program, they get access to the fastest and most desired GPUs before the rest of the market even has a chance to buy them. Now let's put together a price target for IREN. By late 2027, they'll have about 3 gigawatts of data center capacity. Assume their data centers get leased for $20 billion per gigawatt, just like the Nebius deal over 4 years. With 3 gigawatts, that's $60 billion in revenue, which is around $15 billion per year. And even at a 60% profit margin, that's close to $9 billion in annual profit. Apply a 20x earnings multiple, and you get a company worth about $180 billion. Compare that to today's $15 billion valuation, and the upside is staggering. Even if growth slows or margins compress, there's still a massive gap between where the stock trades today and where it could go in 2 years. Of course, no stock is without risks. Here are 3 of them, from least worrying to most worrying. First, Bitcoin dependency. Even though AI is the future, a big chunk of IREN's revenue still comes from mining. If Bitcoin prices collapse, cash flows could tighten, and IREN would have to put their expansion plans on hold. Next, execution risk. Scaling to 20,000 GPUs and beyond is not easy. Delays, supply chain issues, or even missteps in data center construction could slow growth. And IREN's a high growth stock, so any delays will send their stock price crashing. Third, market risk. If AI demand cools or hyperscalers squeeze pricing, margins may shrink. Imagine if demand for AI pops over the next few years, just as IREN finishes building the data centers. Then the data centers they spent years building would be worthless. But here's the flip side. IREN is powered by exceptional management with a strong track record. Their CEO, Dan Roberts, has grown the company's Bitcoin mining production by over 70 times in the past 3 years alone. At the end of the day, if you believe in their vision to capitalize on the future of AI, IREN could be the stock for you. If you found this deep dive helpful, make sure to like the video, subscribe, and let me know down in the comments what company you want me to break down next. Till then, click here to see another stock that I think has massive potential.